This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectation of the company as on date of this call. These statements are not guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Saurabh Mittal, Managing Director and Chief Executive Officer, Greenlam Industries Limited. Thank you, and over to you, sir.
Thank you. Good afternoon, ladies and gentlemen, and a very warm welcome to all of you all. I hope you're all keeping safe and healthy. On the call, I'm joined by Ashok, our CFO, Samarth from the finance team, and SGA, our investor relations advisor. The results have been set up on the stock exchanges and the company website. I assume you've had a chance to look at them. As we reflect on financial year 21, we had several challenges, and I'm sure all of you all know most of them. And we realized that at Greenlam, we could find a way to navigate through these challenges and actually emerge stronger as a company, as a team, and with better financial strength post the pandemic or while the pandemic is on. And I feel extremely privileged to lead a team of committed people, and I'm extremely thankful for their continued dedication, hard work, despite the challenges we all faced last year. Their resilience was extremely critical in helping the company deliver a record year, and actually a record quarter. Yeah. And we believe with this disruption due to COVID, we have a reasonably strong position in both the domestic and the international market, as competition faces a lot of unorganized competition. Is facing a lot of challenges in terms of costs, in terms of raw material availability of people, etc. And even in the international markets, we believe in several countries, the local producers are undergoing challenges of raw material availability, higher cost structure, etc. So I think from a business position, both domestic and international markets, we seem to be pretty well positioned in the current scenario. And all of this has happened, due to the strength of the brand, the product quality we've been shipping all through the years, the deep relationships we've built with our trade partners and our customers, the diversity of the markets we serve with over 100 countries worldwide, and deep presence and wide presence in the domestic market. And despite all the COVID challenges, extremely high raw material costs. In fact, the raw material costs is something we've never seen in our industry. And along with higher raw material costs, we've also had challenges and again extreme challenges on the supply chain, both in imports and in exports, with availability of materials, availability of containers, shipment schedules going haywire, both for RM coming in and goods getting out. So really, I think despite all of this, I think that we've seen a reasonably good financial performance as a company. And Q4FY21 saw one of the highest productions in laminates, with over 4.35 million sheets. And sales were also at a record high in quantities at 4.53 million sheets. And even the value sales was also at 415 crores. And with supply chain, this is despite the fact that in exports we still had delays in shipments and availability of containers. So that's on the performance front. On the demand front, in last quarter, both domestic and international markets had reasonably good demand. And we think now post this crisis, we'll have to see how the domestic market gets back, at what speed does it get back. The international markets, even in this quarter, is looking pretty decent, and we have a strong order book in the exports market. On the raw material cost front, for the domestic market, we've largely been able to pass on the entire RM cost increase to the market across our categories. In the exports market, we've been able to pass on partial increase, and we've passed on most of the additional sea freight increase in the international markets. And some of them were passed in Q4, and the rest of the price increases were implemented in the month of April and some in May also. And the international business is currently doing reasonably well, and it's actually the overall revenues of the international market has gone up beyond 50% in the core laminates business. Q4 also saw decent demand in the veneer, flooring, and door business, with the residential markets picking up, and most of these products largely being aimed at the domestic residential market. So we saw a sequential improvement in Q4 versus Q3. And the other important point is on the Greenlam South Limited plant at Andhra Pradesh. So we are in the last stages of getting the approvals from the government. We have got the cabinet approval for the land and investment, etc. But due to COVID and certain lockdowns, the paperwork are still moving a bit slow. And we hope in the coming maybe 2-3 months we are able to sort out the last leg of approvals, and then we can begin building the third plant in Naidupeta in Nellore district. The exact time, obviously, we can't predict. We are on top of it, and as approvals come in, we'll get running with building that plant. So that's it broadly from my side. I will now hand over the call to Ashok. Ashok will take you through the operational and financial highlights, and post which we'll be happy to address your questions and answers. Ashok, over to you.
Thank you, sir. Good evening, friends. Now I'll take you through the financial performance. For the Q4FY21, on a consolidated basis, we saw the highest quarterly revenue of 415 crore, a growth of 24% on quarter-on-quarter basis, and a growth of 28% on Y-on-Y basis. Gross profit stood at 202 crore, a growth of 16% on quarter-on-quarter basis, and growth of 24.5% on year-on-year basis. Gross margin stood at 48.7%, a degrowth of 340 basis points on quarter-on-quarter basis, and degrowth of 150 basis points on year-on-year basis. The dip in margin was mainly due to increase in raw material cost. EBITDA stood at 67.1 crore, a growth of 15.8% on quarter-on-quarter basis, and 48.3% on Y-on-Y basis. The increase in EBITDA was on the back of higher operational efficiency and cost optimization. EBITDA margin stood at 16.1%, a degrowth of 120 basis points on quarter-on-quarter basis, and growth of 210 basis points on Y-on-Y basis. PBT before exceptional item grew by 86.8% to 52.6 crore in this quarter, as compared to 28.1 crore in the Q4FY20. For the quarter, there was an item of 12.4 crore relating to amount which we paid for settling outstanding entry tax dispute with Rajasthan and Himachal Pradesh Commercial Tax Department. Net profit after exceptional item stood at 30.9 crore, a degrowth of 3.3% on quarter-on-quarter basis, and a growth of 42.3% on Y-on-Y. PAT margin stood at 7.4%, a degrowth of 220 basis points on quarter-on-quarter basis, and a growth of 70 basis points on year-on-year basis. Moving on to the full year, on a consolidated basis, net revenue degrew by 9.2% and stood at 400 crore as compared to 1320 crore last year. Gross margin improved by 60 basis points to 49.8% in this year from 49.2% last year, due to improved product mix and operational efficiency. EBITDA margin grew by 90 basis points to 14.4% in this year from 13.5% last year. PBT before exceptional item remained stable at 108 crore despite lower revenue this year. We have reported a net profit of 73.7 crore in this year as compared to 86.7 crore last year, a degrowth of 15%, mainly due to exceptional item accounted for in this quarter. Moving on to segmental performance, laminate and allied products formed around 88% of our Q4 sales and 89% of FY21 sales. For this quarter, laminate revenue stood at 365 crore, a growth of 23% on quarter-on-quarter basis and a growth of 29% on Y-on-Y basis. Domestic laminate revenue grew by 28% sequentially and 42.7% on year-on-year basis in value term. In volume growth, it stood at 55% on year-on-year basis. International laminate revenue grew by 20% sequentially and grew by 18.6% on Y-on basis in value terms, and in volume growth it stood at 13.9% on year-on-year basis. EBITDA margin stood at 17.9%, a degrowth of 190 basis points on quarter-on-quarter basis and a growth of 100 basis points on year-on-year. Laminate production and sales were highest in this quarter at 4.4 million and sales were 4.5 million sheets with capacity utilization of 112%. Average realization for the quarter stood at 780 rupees per sheet. For the full year, laminate revenue degrew by 1,063 crore this year from 1,122 crore last year. Domestic laminate revenue degrew by 12.4% in value term. However, volume grew by 2% during this period. International laminate revenue grew by 1.7% in INR and volume grew by 0.8% for the period. During this year, laminate business stood at 178 crore, a growth of 1.2% on Y-on-Y basis. EBITDA margin stood at 16.7%, a growth of 100 basis points on Y-on-Y basis. Laminate production and sales stood at 13.57 million and 13.46 million sheets respectively, and the average realization for the year stood at 765 rupees per sheet. Moving on to decorative veneer and allied segment, which formed around 12% of our quarter sales and 11% of annual sales. This includes decorative veneer, engineered floors and engineered doors. In the veneer segment, for the quarter, revenue stood at 32 crore, a growth of 24% on quarter-on-quarter basis and 33.8% on Y-on-Y basis. Capacity utilization for the quarter stood at 46% as against 32% last quarter. Sales volume were at 0.47 million square meter as against 0.36 million square meter last quarter. Average realization stood at 76 rupees per square meter. For the full year, veneer business revenue stood at 78. Veneer sales.
Mr. Sharma? Mr. Sharma, can you hear us? Hello?
Yeah, I can hear you.
Sir, sorry to interrupt, but your voice is breaking up a lot, sir.
Okay. Can you hear me?
Yes, sir.
For the full year, veneer business revenue stood at 78.6 crore, a degrowth of 32%, and the volume stood at 1.12 million square meter with average realization of 691 rupees per square meter. Moving on to engineered wood flooring, for this quarter, a growth of 28.5% on quarter-on-quarter basis and 17% on year-on-year basis. Capacity utilization in this quarter stood at 16%. For the full year, flooring revenue stood at 31.7 crore with a capacity utilization of 13%. Moving on to engineered doors, for the quarter, revenue grew by 42% on and stood at 7 crore. Capacity utilization for the quarter stood at 24%. For the full year, with a utilization of 23%. Gross debt as in March 31st stood at 248 crore. Company is also having cash balance and liquid investment to the extent of 125 crore. Thereby, the net debt stood at 123 crore. As compared to FY20, we could able to reduce our net debt by 140 crore in this year. Working capital cycle improvement from 306 crore in Q3 FY21 to 291 crore this quarter. Net working capital days improved from 83 days in last quarter to 64 days this quarter. That's all from my side. I would like to open the floor for question and answer. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Alroy Lobo from Kotak Investment Advisors. Please go ahead.
Yeah, thanks for taking my question. I just wanted to know the size of the laminate market in India as well as, for the global market, your addressable market, and what are the drivers, for this industry, both in the global market and in India. And could you also give us, some perspective on, for the international market, what is the kind of, distribution that you have created for your laminates? That would be helpful.
So it's a big question. So I'll start here. So domestic exports from India is about 2,000 odd crores annually in laminates. The global market is about $7 billion approximately. Domestic market, it depends because a lot of local companies throw out quantities, but they don't show values. So probably within the band of 5 to 6,000 crores plus minus a bit for domestic market, domestic production for domestic market, for domestic consumption. The drivers for the business is again, so laminates has interior application as well as some part of the business also has exterior application. So in interior application, growth in interiors, which it could be a growth in all forms of interiors. So laminates are used in on the surface of making doors, kitchens, wardrobe shutters, paneling products, bathroom partitions, exterior facade, laboratory furniture. So various kind of applications, is where the products used. So drivers are again largely economic growth, interior growth, growth in residential market, growth in commercial market. So these would be the growth drivers for the product category. And the third question on international networks. So internationally, mostly we have our own distributors who work with our brands. So we have inventory with our channel partners across various parts of the market, who in turn go and sell products to furniture producers, could be large, small, cabinet makers. Our teams in most markets we have our own teams too, working with architects, designers, contractors. So it's a distribution-led model for most part of it. For certain part of the international market, it's a company to large furniture oblique kitchen OEMs model. So these are the two models we follow in international markets. And majority of our revenues in the international market is with our own brand, so we don't subcontract for any other brand across most markets. Does that answer your question?
Yes, it does answer. Could you just give us some perspective of the margins for laminates in the export market and domestic market? Are they similar? And if you can also comment on the working capital intensity in both these markets.
So, we've said this in the past also. The margins in each of these markets at times depends on the currency, raw material costs, structure, which happens at various points. But by and large, the model of the businesses, domestic and exports, go parallelly because you're able to leverage your inventory and your plates and your entire churn of the business. So it depends on the brand mix and the product mix. So there are too many variables, which we can. So sometimes they are similar. Sometimes the export margins are slightly higher if the currency depreciates. At times the domestic margin is higher. Again, within the both markets, it depends on which export market are we addressing. In the domestic market also there are different categories of products. So on a blended average, if you add consolidated sales and just domestic sales, it'll be very similar. Yeah.
Okay. And who are your big competitors from India in the export market?
So our nearest competitor in the laminate business is a company called Merino. So we compete with them in the export and the domestic market. So while we remain the largest exporters from India in laminates, Merino is the second largest. So in India we compete with them, but our model of business is our own branded distribution model in the export market. So at the end customer point, we don't compete with Merino necessarily. So in the OEM market where we ship directly to the end customer, so there we might compete with Merino. But in the distribution market, we end up competing with the international brands or regional brands, depending on which market who's positioned. But Merino is the second largest exporter from India.
Okay. And just finally, on your working capital, that seems to have, is there any scope for further reduction in that?
So as revenues go up, because inventory in number of days will improve, because as sales go up, we don't need to stock more SKUs and more quantities per SKU. So it really depends on the top line. As revenues go up, we think there could be some more improvement, in the working capital cycle. Our endeavor has been to constantly, keep improving the working capital cycle.
Okay. And what was the domestic and export mix in laminates?
Shoji, can you? Yes. So export and domestic.
In the laminate, 56% is export last year and 44% is domestic.
42% is?
44% is domestic, 56% is export for the full year.
Okay, thanks a lot.
Thank you.
Thank you. The next question is from the line of Pritesh Chheda from Lucky Investment. Please go ahead.
Sir, I have one question on the export market for laminates. So that market seems to be growing for us and for the whole industry. First of all, what outlook do you share on the export market, and what unique proposition that we as India have to offer on the laminates export side?
So the international market, we think, will continue to grow, and so I don't know if that's outlook is enough. So we think the international market will continue to grow, and we think we'll be able to expand both volumes and value sales in the international markets. And there are still certain geographies where we are not meaningfully present. In several geographies where we are present, we're still not number one, number two. So I think there's an upside in both quantities and realization in the international market. Regarding what does India have to offer? So I would say, I'll talk more from our company's perspective. So our export model is not just a cost-driven, manufacturing efficiency business. It's a combination of, product quality, manufacturing efficiency, branding, distribution, specification. So I think it's the entire value which you bring to the customer in terms of product offering, certification, supply chain, large color palette, several options of texture molds, and local teams in many markets to support the distributors and customers. So I think it's an entire package we end up offering. There's no one specific, advantage which I can mention.
So in this, the decorative paper usually gets imported, and I think there's German suppliers and a couple of others where the most important part gets imported. So is it that the industry is more manual in nature, and which other countries you will end up competing with in the export market?
So deco paper is largely imported, either from Europe or from Asia. Mm-hmm. And the ones which is produced or printed in India, the print base of that on which the printing is done is any which was imported. So you can assume that deco paper is by and large, I think 90-95% either directly imported or the print base is imported. And what is the question? Is manual in nature?
So I'm just wondering, is the industry more manual in nature? And second, which countries do you compete with in the export market as your competitors?
So industry is, I would say it's like semi-auto. Certain parts of the plants are automated. Certain parts still need certain amount of manual intervention. Okay. And which countries do we export? Which countries do we compete with? I think it again depends. There's no one country we end up competing with. So because very few companies have a model where the manufacturing is centralized and distribution is across various parts of the world. So different geographies we end up competing with regional players, local players. In the very low end segment in certain markets, we have certain competition coming in from Chinese producers, but that's really in the low end of the market. As Greenlam, we're not prevalent, or we don't operate in that space. But in certain low commodity items, one ends up competing with Chinese also in certain markets. But otherwise, it's regionalized. Every region would have its own set of competition.
And lastly, sir, the raw material prices, whether it is paper, formaldehyde, phenol, everything has shot up really a significant way.
Sure.
So first of all, what is the cost inflation that you are seeing, and what kind of pricing have you already taken, and what incremental pricing is left to be taken, and what is the strategy there?
So raw material costs in laminates across various kinds of paper, chemicals, freight inwards and imports, across every RM literally there has been a significant price rise. We have been able to pass on the entire RM cost to the domestic market.
Can you laminate? What is the RM rise blended?
I have to run the math, because some certain costs have gone up like 2x also in certain chemicals. But so whatever was the increase in domestic, we've passed on completely. In the international market, I said that earlier in the call, in my opening remarks, we've been able to pass on part of the cost increase, and most of the sea freight increase has been passed on to the international market. So some part still remains to be passed on into international market. So this is where we are.
So what is the price hike in domestic?
What is price hike? I have to run the math. If I do a total from, I think, November onwards now, it would be approximately 12%, maybe 12 to 14% types. Yeah. If you combine, because RM cost has gone up in stages, right? So I think October, November, we did one increase, then we did one more. Then so the three increases which has happened as far as I remember in the domestic market, I think it's in the band of. Actually, correct me if I'm wrong. I think it's about 12 to 14%. Right?
In the category to category, it will vary, but what you said is correct. That will be the range of this.
Yeah.
Okay. Yeah. Thank you very much, sir.
Thank you.
Thank you. The next question is from the line of Saurabh Patwa from HDFC Mutual Fund. Please go ahead.
Good afternoon, sir, and thanks for taking the question.
Hi.
So just wanted to understand, this one first is a bookkeeping kind of a question. So our capital employed in laminate business has grown up in this year. This is despite a slight marginal fall in the revenue. Is it due to some CWIP, as in some Capex? I think we have done some Capex also. So is this because of that?
No, it's because of the it's because of the new project which will be coming in the south, and which is we have announced for the laminate. So that's why that is being captured here.
So some part of it has already been started coming in the books now.
Yeah, we paid for the land.
Okay, understood. Well, second is
it's been there since March 20. This land payment, so it's been there for a year.
No, I was comparing this with March 20 actually. So I think our CWIP, capital employed in laminate has increased by 8%. So if the land was there last year, so this must be something else. That
shouldn't be.
Okay.
So,
Yeah, and moving to second question, sir, our laminate volume growth has been very flattish from last few years, in fact, now. So I think it's in FY17 when we did 12.8. This year, after the second half, when we have done a really good comeback, but still it is almost more or less there only. So the growth in revenues come largely from price hikes. So where do you see, sir, going forward? What's your view, maybe 3 years from now? Where do you see the volumes going to?
So if you see, this year was impacted, with April and partially May and June. Last year to March month was FY20. Things bad. So I think if you look at this year, the production and sales in volumes, I think should be meaningful, unless there's some disaster with the COVID and all that stuff. I can't put a percent, but if you've seen, we've done about over 110% utilization in Q4. So we can maintain those levels of utilization and maybe slightly improve too in terms of volume. So we'll have to see how the market behaves. But
are we impacted by the second wave in either in terms of demand or in terms of supply in any way?
So the second wave hasn't impacted the running of the plant. The plants have been running. We haven't had much challenges on the manpower availability and RM supplies, etc. The international markets are not affected. Rather, it's running pretty positive. The domestic markets obviously have been impacted, and we will be impacted by the sales in the domestic market because nearly 75-80% markets have been shut at various points from the second or third week of April until now, and most of the markets are shut. While sites are still open, construction sites in some places, the OEMs, the furniture producers, are still working, and most of our warehousing in the country is out of the city limits, so they are also functioning. But sales have been impacted in the domestic market. So whether we've been impacted or not, yes, domestic business has been impacted. The international is doing okay. There should be no negative impact on the international business as we see things now.
Understood. Just one last question, if I can just add in. Since we have been a very strong player in laminate from a very long time now, do we plan to get into the pre-lam board business? Of course, it is more commoditized business, but we being having a large scale in terms of laminate can do some value-added players there. Do we have any plans or in any other adjacencies which we believe are right for our business?
So we do have some pre-lam business currently dealing with us, but those are largely in the premium category of the market. So yes, we are looking at opportunities in adjacent spaces, and we're still kind of formalizing our plans, and we shall come back to you once we are sorted out with our plan. So to answer the question, yes, we will be looking at some more adjacent opportunities, and there are adjacent opportunities.
Understood, sir. Thanks a lot and all the best, sir.
Thank you.
Thank you. The next question is from the line of Bhavin Chheda from Enam Holdings. Please go ahead.
Hi, good afternoon, Saurabh, Ashok.
Hi, hello, Bhavin.
Yeah, congrats on record set of numbers. Yeah. Just few questions. First on the product mix, if I see your laminate NSR, they have moved up quite a bit on quarter-on-quarter basis. I see the last quarter's commentary, I think there was more sales of 0.7 mm sheet, and that's why the realizations were low. So this quarter, despite record production and sales volume, has product mix again shifted more towards 1 mm, and that's been reflected in a higher NSR?
Bhavin, I'm not able to hear you clearly. Can you repeat, please? Bhavin.
Yeah. So it's clear now?
Better, Bhavin. Better.
Yeah. So I've seen the laminate realizations have improved on a quarter-on-quarter basis.
Yes,
I think
yes.
Last time when we spoke during last quarter, I think the realization was low because the sales of 0.7 mm had increased. So has it got corrected this quarter despite your volumes being very high? So have you sold higher 1 mm volumes this quarter?
So Bhavin, 1 mm volumes clearly have gone up in Q4 versus Q3. But as a percent, I think 0.7 volumes have also probably, as a percent of the mix. I don't think that has come down though, right? So probably the volumes of 1 mm and 0.7 have gone up, have been maintained, as a percent. With volumes going up in 1 millimeter, but I think the percent is still the same because in Q4, we had a launch of one product category in the 0.8 thickness. Actually, in Q4, and Ashok, correct me if I'm wrong, right? I think the 0.8 numbers have also gone up a bit, Bhavin. Right?
Okay. So, or what I can say, the realization which is up quarter-on-quarter is because of price hike or just product mix?
I think this will be largely price hike because as a percent of 1 millimeter, although volumes have gone up, but volumes of all categories have gone up.
Sure. And how much percentage of price hikes we took in the quarter across products, roughly average?
Must be 2.5-3% in domestic, Bhavin. Can I come back to the exact number on that?
Sure, 3-4%. Okay. What would be the next year's Capex would be?
So Bhavin, on Capex, the routine Capex will be in the band of 25-30 crores, some completion of, construction, etc. spending at the Behror factory. And then depending on how and when we get the approvals to start the construction at Andhra Pradesh, that will get added on. And assuming that we are able to start building the plant sometime in Q3 of this financial year, so that might add another 50 odd crores, 50-60 odd crores this year. So depending on how that goes, Bhavin, because we do need to, immediately add more capacity. And in Q4 also we ran out of, we were running full, and we can sweat a bit more, but so we're going to rush the process of adding more capacity. So once approvals come in, that Capex will get added on.
Sure. And if I missed the number of engineered wood flooring and engineered wood door EBITDA losses, if you have shared in the opening remarks for the quarter.
So you will do that. Hello? Ashok, go ahead.
Yeah. Sorry.
Yeah, sure.
For the quarter, for the floor, the EBITDA loss is 2.8 crore and door is 0.9.
2.8 and 0.9, right?
2.8.
Okay. And FY22, we expect a break even there, or it will take another year or so before we start seeing EBITDA break even in these two segments?
Depends on the market. We saw last year, then again numbers came down. So really also depends on the market situation, but endeavor obviously is to come to break even at the earliest possible.
Sure. And has the Q4 momentum been carried on? Because again, there have been lockdowns, and are our factories running full, or they are running partly utilized in the month of May? And how is the scene overall, first on the factory front, and again on second on the overall demand front, both in domestic and export markets?
So factories have been running, Bhavin. Factories have been running. RM inwards, availability of manpower resources, batches, all that's by and large under control. Nothing very significant. We've been able to run that part of the business pretty well. On the demand front, the international market is looking pretty okay. So we are maintaining the momentum of quarter four. Domestic clearly has taken a hit post, like second, third week of April. So sales are going on. It's not as if it's collapsed completely, but numbers are extremely weak. So if you look at quarter one, I guess international numbers will maintain the momentum built up in last quarter. Domestic will surely take a hit. Depends on how June goes, and how this unlocking happens, because mostly all the traders markets across the country, 75-80% markets are shut or partially shut, etc. So this is the way we think it looks like.
Yeah. Thanks a lot, Investor.
Yeah.
Thank you. The next question is from the line of Sneha Talreja from Edelweiss Securities. Please go ahead.
So thanks a lot for taking the question, and congratulations on good set of numbers. So just a couple of questions from my end. Firstly, with regards to, you of course mentioned that raw material prices have gone up significantly, and in the domestic market you have taken price hike, but in the exports market you're taking it partially. So question here is, last time you gave margin guidance of 15 to 16.5%. Will you be able to maintain that is the first thing.
So when you say 15 or 15%, you asked me for maintaining in laminates or overall?
Laminates.
So actually my answer is I don't know, right? It depends on how the second wave goes on, when the markets open, how things shape up. So really, last quarter laminates consolidated EBITDA was at 17.9%, right? So
right.
It really depends on how things go. So on the prices, we've said domestic, the entire cost increase has been taken, and exports also actually in terms of percent increases. If you add the sea freight we've charged to the customers, percent increases to the customers are in similar band of what we've done in the domestic market. It's not as if we've not increased prices on exports, but on exports, the current disadvantage is RM costs have gone up as well as the shipping costs, right? And shipping costs have gone up like it's like nobody's business,
Right.
3-4x sea freights have gone up, and we've added all the sea freights to the market, but on the RM costs we've been able to partially put in the high. So it depends on how the markets move stay.
Oh, got that. That was helpful. So second question is related to phenomenal volume growth that we've seen. Of course, since last 2 to 3 quarters, I must say that you have been highlighting that there's a pressure on unorganized segment, which was not even felt at the time of GST and which is now being felt. How much do you think is sustainable, given that this time it has come on the back of raw material price increases, and of course because of this continued COVID environment, that the cash flow issues at their end. So I mean, what's your rough sense on how much of this competition could just stay away, and for how long?
I'm not sure exactly how long and how many companies, etc. But we do know and we do hear that several manufacturers, both mid-size, small size, and even some large manufacturers, are having challenges in availability of raw materials. Costs are high, cash flow is a problem. Even manpower availability in certain smaller plants is a challenge. And besides 3-4 companies, most of them are completely or largely dependent on the domestic market, and with the second wave, that's also been a bit of a challenge. So we do hear that the unorganized mid-size manufacturers are under a lot of stress. I can't exactly quantify how many of them and how long, etc. So really tough to say that, but yes, we do hear that there are several of these manufacturers are under stress. And with this e-way and fast-track clubbing and compliances, that's also there, which has been, which is also has been a matter of concern with the unorganized guys. So yes, we do know that they're under stress. Does that answer your question?
Sure, got it, sir. And so lastly, on the inventory in the system. So last time when wave 1 occurred, I think there was fair amount of inventory, and in fact after the market opened, there was some amount of resistance in the channel to pick up. what are you sensing now since the situation has not come to standstill? In fact, as you also said, there's some materials still flowing in. So what's your expectation here? About the current inventory in the channel, and would there be any resistance?
So as far as we are concerned, our inventories, with our distributors have always been quite controlled and systematic, because our credit terms are quite tight versus any other manufacturer. And so as demand picks up, I think as they start selling secondaries, they will have to pick up primaries from us. So we don't see a situation where there's excess inventory, of our products with distributors or in the channel. So if demand picks up, I think secondary sales should start. Now, whether they have lesser inventory, I'm not sure on that. I don't think so, because mostly our primary and secondaries match. So it's not, if secondary sales go up, primary sales also go up. So I think as demand picks up, they'll have to pick inventory. They will pick inventory up.
That was really helpful, sir. So thanks a lot. Just last one, by when can we expect the new South plant? I know it's getting delayed and you may start the work in the next 2 to 3 months, but some tentative timeline to that?
So, like I said earlier, we're in the stages of certain approvals from the department. We've got some cabinet approval. We need environment clearance. So all that follow-up is going on due to the COVID. It's been a bit slow.
Right.
So I think our stages of getting all of that. The moment it comes in, we'll start building the plant.
Sure. Got that, sir. Thanks a lot, sir, and all the very best.
Thank you, sir.
Thank you. The next question is from the line of Achal Lohade from JM Financial. Please go ahead.
Yeah, thank you for the opportunity, sir. And congratulations for the great numbers. What I wanted to check was in terms of the South plant, since it's getting delayed and we kind of run out of capacity in last quarter itself, is there any scope for us to add capacity at the existing location? Is there any thought on that? And if yes, what kind of capacity addition we can see? Or would that cap our volume numbers for the current year if everything is normal?
So in the existing plants, we don't have more potential to, add capacity. So I think we're already quite, the space of the plant, the balancing of equipment is all quite done. So we cannot add more capacity in existing locations. The capacity utilizations is something, we can still squeeze out a bit more. And what is the next question, Achal? Sorry.
Basically, with respect to the South plant, it's getting delayed. Mm-hmm. So you're saying that you could squeeze in some more volumes out of the existing capacity. Yes. Is that understanding right?
Yes.
But no thoughts about brownfield expansion at the existing location as yet?
No, we've already done all of that. So now, with the plant space, size, equipments, the boilers, system, places, it's all designed in a way that it can't take in more capacity in the existing locations. And South, I think we're in the last stages of approval, so we don't want to turn back and take a different decision. So I think once we get the approvals, we can rush the creation of the new capacities in South.
And what would be the timeline? Let's say theoretically it were to come in, in June. How much time would we take to have the phase 1, and what kind of capacity would that be?
So, assuming from the time of construction, it would take anything between 12 to 15 months to build the laminate plant. And we've done things in this time and in the past too. And currently we've announced 2 lines in the new plant, but we are actively discussing, maybe add some more lines. So, which that decision will take, in the coming months.
Understood. And fourth quarter, it appears to us that it is fairly normal quarter. I mean, there is no disruption, so to say, in terms of supplies, in the inward or outward side. So, if the situation is normal, can we assume or can we extrapolate the fourth quarter volume numbers And is there any exceptional, items which have driven the margins to record numbers, sir?
So in fourth quarter, we did have challenges on RM supply. It's not visible in the numbers in terms of imports and in terms of container availability, shipping delays, and so it doesn't show up so much, but there still are challenges in certain RM availability, goods inward and goods outward for imports and exports. On the volumes, these volumes, the markets are open, are sustainable, in the sense we can produce on a routine run rate basis these kind of volumes. And so there was not much one-off. There was not any one-off stuff on this. Ashok, you want to add something? Please go ahead. So there were no one-off in terms of costs or margins or anything of that sort.
Understood. Just one more question. With respect to the exports, what is typically the sea freight in terms of the percentage of the cost for the importer? Let's say if somebody is importing from India, what is the sea freight? Because the sea freight has gone up. So what I'm trying to understand, does it hurt our competitiveness actually in terms of we losing out to the peers, or the shipping cost has gone up for everyone?
So shipping cost has gone up for, I think, every exporter and every exporting nation. What is the cost will depend on the location, right? So location in South America and US, the percent is higher. Locations in Southeast Asia, Middle East, percent is lower. But costs have gone up depending on the location and the lines and the timing, etc. 2 to 4x across. Will that hurt our competitiveness? Maybe not, because costs go up for everyone. And just because of the hole we have in the market in terms of inventory on ground, marketing support, sales support. So I don't think that's a big challenge. Several regional manufacturers are also having challenges, at least on the RM front. And we do know in a couple of markets, due to RM not being available, certain international producers have cut down production, suspended production for some time, etc. So I think it's mixed. You can't say this is the only thing which is going to kind of make you non-competitive.
That's very helpful, sir. And just last question, if I may. I'll come back in the queue. No problem.
The next question is from the line of Ashish Poddar from Anand Rathi. Please go ahead.
Yeah, hi. So basically, I have two. Yeah, hi. So basically, I have two questions. So in the domestic market, you spoke about consolidation, smaller players, getting hurt because of operational challenges. Despite our domestic, value in laminates was down about 12% in FY21. So if you can give some sense about the industry in FY21, what kind of decline would be there, and what kind of gain the large guys have gained from the disturbance at the smaller guys. This is my first question.
Frankly, Ashish, I don't have a math on that, and something we'll have to probably get back to you on this math. But this is just a hunch, and I'm not sure whether I can verify this with really data. If domestic guys are down 25-30%, we are down only 2% or something like that. So I'm not sure, but this is a sense we get, with our various.
But if you can directionally give that, is the decline for industry much higher, or it's closer to our number? I mean, any directional thoughts would be helpful.
Well, so again, I haven't measured that. I don't measure that, but we do hear that local plants are minus, and some people say 15-20%. Some say 30%. So I don't have a math on that, honestly. So giving you a number will be
okay.
Tough. So if you see our numbers in volume, FY20 versus FY23, the full year, we're nearly flattish, domestic and export put together. Value sales were down about 2.5% on an annualized basis. Right? Domestic value is down by about 10% for us.
Yes. On your export business, you spoke about your strategies in export market. So is China plus one strategy also helping us in getting better traction for our kind of players?
No, not necessarily in our laminates, because we said earlier we're not really competing with China, at least in the markets we are operating in. So I don't think that's the driver for the export business.
Okay. So it will be largely driven by the penetration in the existing market and entry into newer markets. So.
Yeah. So, and we said, our business is not very commodity. Like it is export, is not very. It's not based on pricing and manufacturing efficiency. It's also about supply chain and deco papers, marketing, distribution. So it's more like a routine growth. It's not something which is triggered by a China plus one strategy in exports.
Right. So my last question, I think I have just clarification on this question earlier, but didn't get satisfactory answer. So Q4 revenue of 400 crore plus and a margin of 16% plus. In a normal quarter, barring Q1, so in quarters ahead, do you think that these are the normal numbers for upcoming quarters? Or do you find that Q4 was abnormal in some sense and maybe you will find some taper down in growth and margin?
So revenues and production capabilities, capacities are absolutely in place. So, it's something which can be done or even higher can be done. As far as margins are concerned, if those numbers happen, my guess is margins will also happen. Obviously, currently, since there's so much uncertainty with second wave and third wave or whatever, so I can't say much over it. But I think with those kind of volumes, probably margins can also happen.
Thank you.
Yeah.
The next question is from the line of Gaurav Agarwal from Bowhead. Please go ahead.
Hi, sir. Thank you for taking my questions. Just a couple of ones. Sir, you mentioned that your export, proportion in your for FY21 in the laminate segment was 56%. So firstly, is this volume or is this value? Or there is no difference since you mentioned the margin is same for both for domestic as well as exports. So if you can clarify whether the 56% or 44% breakup that you gave was of volume and of value.
This percent is of value.
Okay. And would it be similar for volume also?
Volume will also be similar. 1 second. Volume will be. That's my CFO. Volume will be about 54%.
Okay, so in terms of margins, I think exports would be a bit better in terms of margins. Will it be like this?
Well, I can't say that. It will be similar,
Okay.
like I said.
No problem.
Yeah.
And sir, I missed one thing that you mentioned. From the date of getting the approval, for our new plant in AP, how much time will it take, to operationalize it and get it running?
For laminates, I think it should be like a 12 to 15 months types.
That is from the date of approval that you get the approval.
No. From building. How can you say approval? From the date of starting the construction.
Okay. So I would presume, once you get the approval, the construction will start maybe in a month or so. So that would
depends on COVID, depends on so many more issues.
Okay. Well, okay, sir. Thank you.
Thank you.
Thank you. The next question is from the line of Nitin Soni from GC Investments. Please go ahead.
Yeah, hi. Just a couple of questions. You said that the domestic market is in the ballpark range of about, say, 4,000-5,000 crores. We do about whatever 500-600 crores. Wanted to understand how much of the domestic market is what you will call as your target market, where the realizations are high, where there is decorative. I'm talking of laminate per se. So how much of that market is what we can really get? Because there is a huge market which is at the lower end with 150 or 200 rupees of realization also. So just wanted to understand that piece.
So you can assume, I don't know, maybe 50-60%.
50-60% of the market in terms of value-wise would be at our price point.
So no, it won't be at our price point. Prices will be lower. So I think for that.
I mean, let's say above 500 or something.
No, that'll also be so. see, if you see per sheet value, you can say there's a 1 millimeter market, there's a market under 1 millimeter up to 0.8, and then below, right?
Right.
Per sheet value, even in the 0.8 for most local companies, will be 500 rupees sub. So if your question is, what can be the addressable market, if you're saying that, or are you saying...
I'm trying to understand what is that market we are targeting. We will not be there in plain vanilla laminates. So
now we are now present across price points from 1 millimeter, 0.8. We also launched 0.7 last year in the COVID time. We also in the facade laminates, compact laminates. So currently, as we say, besides maybe few smaller segments or very, very low-end segments and some more segments, we have products across those price points. But obviously, we are premium in most categories and most price points.
Okay. So from that perspective, hello. Yeah. So from that perspective, the growth, we still have a huge leg room to increase our market share, because with only 10% market share, the growth should be much, much higher, right? Given that, or we are only targeting a very small part of the market, which is the premium end of the market, and where we would already have 25-30% market share. I'm just confused on that part.
So yes, obviously, in the premium end, we have a higher market share. And with us introducing the lower category and all these cost increases, compliance pressure, etc., on the local companies, we think the market we can go after, is larger and wider. And obviously for that we need more capacities and we need some more time. So yes, the addressable market, I think, is getting larger for people like us now.
So what would be the premium end of the market where you would earlier be targeting?
No, so when you say premium end, is it like in terms of thickness or value of that market?
In thickness and value-wise both. I mean, in value-wise, I would say, because it...
I have to run the math. Probably I don't have the data right across me, but maybe you can have a dialogue with Ashok and we can probably run that math a bit better. I'll just give you general numbers right now.
And my second question is perfect. And my second question is with respect to export. Over the next 3 to 4 years, 3 to 5 years, given the market is huge out there, how do you see the potential for us for the exports in terms of the size? Can we be like a much larger piece? Can the exports be a much larger piece for us?
Yes, we're quite positive about the opportunity we have in the international markets, and we've been at it for the last 15-17 years, in terms of building those markets. And we have opportunities in both volume growth and relation improvements. So yes, this we can do.
But have we reached like a critical mass? Yeah, I'm just finishing this. Have we reached a critical mass wherein we can see a sharp, strong growth from here on, like in the export markets?
I'm not sure on that question on whether we are at a critical mass or we will reach one. But I think with more capacities which we are looking at building in Andhra Pradesh, and we've taken a large piece of land, so I think we can expand, very well if the demand and the market opportunity do show us. And there is an opportunity for sure. And yeah.
Perfect. Thank you.
Thank you.
Thank you. Before we take the next question, a reminder to the participants, please limit your questions to 2 per participant. Should you have any follow-up, may be requested to rejoin the queue. The next question is from the line of Kedar Kailaje from Fortress Group. Please go ahead.
Yeah, thank you. My question is on the engineered floors and the engineered doors segment. So firstly, what is the market size of the floors and doors? Secondly, what is the competition that you are facing there, and what is Greenlam's market share? And thirdly, do you see this as a growth driver in the next 3 to 5 years, and what would be the growth drivers? So those would be my questions.
Right. So the competition, I'll start with that. So engineered doors, we end up competing with traditional way of producing or setting up doors, which is the wooden flush doors and carpentered doors at site by customers, and certain other manufacturers who have also started a similar model of engineered doors produced at the plant and fitted on site. The market size of engineered doors, I think, has to be looked at. If you look at the entire door market or the entire opening market as an opportunity, this can be quite significant and large, because we are doing non-fire rated doors, some fire rated doors, and also looking at doing some specialty doors. Right. So this is a significant market size, but the ramp up has been fairly slow, I would say that. In engineered wood, we end up competing against imports in the same category. There's no other meaningful local producer as far as we know, and we end up competing against laminate flooring too, with vinyl flooring at times. So competition is imports, laminate flooring, vinyl flooring, at times marble, carpets, so all the premium flooring material, and sometimes laminate flooring, because it's like a lookalike at a lower price. So these are competitors. Market size of engineered wood flooring, would be in the band of 350, 400 crores, imports and domestic put together. And yes, we have capacities in both the categories, and we are looking at building the business in this category.
Thank you. Yep. The next question is from the line of Arun Baid from BOB Capital Markets. Please go ahead.
Yeah. Hi, sir. Two questions, sir. So one is, what's the peak capacity our current plant can run at? Like we did 112% in Q4. Is that the peak number, or we can go ahead of that?
Well, you can say this is in the range of that peak, because 110, 115, I think in that range we can run the plant on a consistent basis.
Okay. And second question is, are we looking at any new categories besides the current ones in the near future? Sorry?
The answer is yes. We look at some more other categories, which is not.
So your voice is breaking. Sorry.
I'm saying, can you hear me now?
Yeah, I can hear you better. Yeah.
Yeah. So I'm saying yes, we will be looking at some more adjacent categories in the future.
So is that after the completion of the new plant, the south plant, or it can be before that?
Well, it could be aligned, with the south plant itself. So, yeah.
And that will be based on manufacturing again or outsourcing, sir? Because as a Capex perspective.
So, our model of business is largely manufacturing led, and my guess is will be manufacturing led.
Okay. Thank you. Yes. Thank you. Best of luck.
Thank you. The next question is from the line of Ronald Sioni from Sharekhan. Please go ahead. Mr. Ronald Sioni, your line is in talk mode. Kindly go ahead with the question, please.
Hello, am I audible?
Yes, sir.
Yeah.
Hi.
Hi, sir. Yeah. I just had two queries. So first one is, why are we not going for acquisition since, since this plant is still away, more than 15 months away, and the unorganized sector itself is reeling under pressure. So
right.
What is actually stopping us from acquisition?
Yeah, right. So actually, if you look at the unorganized manufacturing setup in the country, who are potentially weak or have got weak or could be up for sale or could be acquired, most of these companies, their equipments, their land size, their plates, their deco paper, will not be aligned to the kind of manufacturing setup we want to build. And these are largely just maybe one or two press factories with very inferior quality of equipment, poor speed, no energy levels, in terms of the power energy which is needed to run the presses and impregnating machines. So practically, it looks good on discussion, But I think my guess is we have to rip apart everything and put everything brand new. So might as well just wait and rush the approvals, and Andhra Pradesh and start building the plant, because it's a 65-acre plot and we can keep expanding brownfield like we've done in the past at Himachal Pradesh and Behror. Every 18 months we've done one brownfield expansion, and each brownfield expansion has lower capex and incremental EBITDA. So I think that's a more longer term view. There could be some stress on capacity for for some time, but we still think that's a more long term and a better route. That's the reason, the acquisition opportunity is not something we're very excited about in the laminate space.
And so second one, the last one is that how much capacity does one line add to the total capacity if you're setting up one line?
Yeah. So it depends on which product you produce, what size and all that. But you can assume about 100 and in our kind of business model, 120, 125 crores. On an average, one line can end up producing, because normally our presses are larger, more number of daylights, higher value production. So you can safely assume for average 125 crores. If you're doing larger size laminates like 133/5, 4.25 by 10 feet products, or 6 by 12 products, then the value can be slightly higher also.
Thank you very much. Thank you.
Thank you. The next question is from the line of Shrenik Bachawat from JM Financial. Please go ahead.
Hi, sir. Thanks for the opportunity. Hi. I wanted to understand that the commodity laminates that we make, do we plan to do it on outsourcing model, as we would like to use our capacities for the premium products?
So actually, in our category, this outsourcing model, is with our experience, does not work well, because your number of SKUs are higher. Unless the local companies are cheaper, not because they are more efficient than us in manufacturing, it's because they cheat, right? And they will not bill, they will not pay the compliance taxes and all that stuff. Otherwise, ex-factory gate, product, our manufacturing cost will be lower than theirs. And even the quality standards, supply chain, with the local companies is always a challenge. So till such time we build up more capacity, we can reduce the commodity categories a bit.
Ladies and gentlemen, we take the last question from the line of Kedar Kailaje from Fortress Group. Please go ahead.
Yeah, thanks again, sir. Just getting back to the engineered floors and doors. So you mentioned that market size is huge. Could you give a sense as is it bigger than the laminates market or equal to the laminates market, or some numbers regarding that?
I can't give you a number right away, but if you add the wooden frames, because we are doing the door sets and the leaves, right? So when you say door set, even the frames are being done, with the doors. So I don't have the math right away in front of me, but my guess is it'll be slightly smaller than the laminates market, I guess. Maybe similar, I'm not sure. I don't have the data right in front of me.
Okay, and if I understand correctly, this would be only for the OEMs, not retail, right?
So currently, what we are doing with the doors is largely, doing projects, right? So premium residential builders, hotels, right? Some retail also, but largely focused on mid to larger size premium door requirements. So we're not doing just 1-2 doors, and we're not selling in the trade. It's through specification into the builders and to hotels and schools and all that stuff.
Okay. Thank you.
Thank you.
Thank you. As there are no further questions, I would now like to hand the conference over to the management for closing comments.
Thank you, friends. Thank you for your time and patient hearing. And we appreciate the questions which have come across our way. And be safe, and thank you so much.
Thank you. Ladies and gentlemen, on behalf of Greenlam Industries Limited, that concludes this conference. We thank you all for joining us, and you may now disconnect your line.
Thank you.
Thank you.